You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And then remind you, if you ever have any home or finance related questions, I am the consumer advocate looking out for you, and you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you, even if you don't have any needs today. Save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. We celebrate every day on Ron Siegel Radio. Let's take a, oh, I like this one. Cuban Sandwich Day. Where do you go for a good Cuban sandwich? The place I used to go to, they were gone. I really enjoyed them. It's a good Cuban sandwich. Let's see. What else? National Sponge Cake Day. I like that one too. A little whipped cream on top of that. I take the sponge cake, throw strawberries on there, whipped cream. You got it made. I like that one as well. Ride with the Wind Day. I don't know about that. Let's move right along and see what's going on in the markets today. Dow Jones Industrial Average up 141 points. The S&P is up 40. The NASDAQ is up 200. Oil down 63 cents a barrel. And we're watching, it's pretty interesting, the 10-year Treasury. This is a trap. Be careful, people. The 10-year Treasury is down almost 11 basis points, 4.22. And I'm going to be the first to tell you, I think it's a trap. I would watch out. And it's not abnormal when we see markets. They don't ever move straight in one direction. That's just not the way the markets work. Well, right now we're watching, and the 10-year Treasury, it's been going down, down, down. I think there's a song about that. But now we're seeing it took a jump up. Is it a trap? Would not surprise me if that's the case, but we'll check that out in a little bit when we get into the mortgage minute. Might be a trap. I'm gonna tell you, be real careful right there. Let's see what and we got we had oil prices. That one wasn't too bad. We saw the oil numbers where oil's down 62 cents, down at $79 a barrel. Hey, I got a question. I want to put it in chat for me. Are you going to be watching the debate tonight? Or is it just a waste of time? I'm going to throw out there that I think it's a waste of time. I might have it on in the background. I'm usually doing some work about that time. So I may have it on in the background, but the likelihood is, why? These guys are all way behind. You got the I don't remember the guy's name. The governor, I think it's one of the Dakotas, the governor, he got hurt today or yesterday playing basketball. But why is he even on the stage? I mean, did you see what he did? This is talking about politics at its worst. So one of the things that they had to do is they had to, in order to qualify for the debate stage, was they had to have 20,000, I think it was, or 40,000 unique donors donating at least $1. So what does this character go and do? He's paying people $20 to give him a $1 donation. Is that the way the idea is supposed to work? You could probably get 1 million people to give you $1 if you're going to give them all 20. I'll line up and do it. I mean, I don't mind. I don't even know who the guy is. he's got as much chance of winning as I do, but I guess if that's what he wants to spend his money or his donor's money, so be it. But I just don't think it's the right way of doing things. Maybe you do, but tell me your thoughts on that. Give me a call, 800-306-1990. Put it on one of our socials. We've got our pages as we broadcast. You can actually see them on all of our pages as well. So tell me what your thoughts are. Are you going to be watching, and do you think it's fair going in and buying your way to getting those donations? Why don't they just say donate, all that money yourself? It's, they should put some rules in there. And you look at who the debaters are going to be. That's another one. You've got some of them that there's no chance. So what's the point of the whole thing? You've got DeSantis, he's got a shot, but the rest of them, really, Chris Christie, I used to think he was worthwhile. I don't think so anymore. You look at it and you say Mike Pence, he's got maybe 1%. And do you think anybody that's going to really vote for him that's a Trump supporter? I don't think so. I like Larry Elder. I don't think he made the final cut. So that's going to be a downer right there. Asa Hutchinson, I think he should go back to Arkansas. But so what is going to be the value? I like Vivek Ramaswamy. I thought to me that's a breath of fresh air. I like that one. Is there anybody that you really like on there that you want to see in this whole debate scenario? Just throw it out there again. Let us know. Gavin Newsom, I guess he's going to be debating Ron DeSantis. That'll be a interesting one. Although that one may be on the rocks as well. So maybe they'll do that as a prelude to the Zuckerberg-Elon Musk fight. Would that be an interesting one? So we'll see. We'll see what happens with all these things going on in the debate. Josh, we're going to break a little early because I want to make sure I get in our segment today about veterans and maybe no property taxes for veterans. So you're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, why you need a true expert in today's housing market. We're going to talk about veterans and paying property taxes. Is there now a method around that? And real estate, is there a way to legally avoid taxes when you're buying and selling real estate other than the 1031 exchange? All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
79% of all credit reports have errors that should be corrected through factual disputing. You could be saving thousands every year if your report was accurate. CreditSanitizer.com provides a free credit report audit when you furnish a specific $1 credit report. You can use this information to request corrections to your report and potentially save thousands of dollars. Get your free credit audit at CreditSanitizer.com. That's CreditSanitizer.com for a free credit report audit. CreditSanitizer.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You've got the phone. Make the call, 800-306-1990, 800-306-1990. Every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 42% of all mortgage transactions nationwide. They do not tell us points paid, points received, APR, just the actual locked rates. Again, consumers 42% of all mortgage transactions. Yesterday, 30-year conforming loan, 7.299. 30-year jumbo, 7.524. 30-year FHA, 7.099. 30-year USDA, 7.106. And the best loan on the market for our veterans, 30-year VA loan, 6.964. Every one of those were up yesterday. And if you want our market commentary, our forecasting daily every morning, rsrmarketminute.com, rsrmarketminute.com. We send that out. Generally we try and get it out by 6:30 or 7 o'clock West Coast time. Kind of depends on when the data comes out as to whether we can get that done at those times. But we get it out every morning. It's both emailed first, then it'll hit our socials. 10-year treasuries are down 12 basis points, 4.211. Again, as I mentioned, be careful of that. The S&P 500 up 42. Mortgage-backed securities are up 63 basis points. That's huge. That means interest rates are down so far today. Again, be very, very careful. BLS released their preliminary revisions from April 2022 to March 2023. And in total, it showed that they overstated job gains by over 300,000 people. Surprise. That means on average, they overstated job gains by 25,000 per month, or almost 9%. Remember, once a report is released, it is then revised the following 2 months, then has this preliminary revision like we got today, and then a final revision. What is a bit maddening is that initial thoughts on jobs reports could be correct, but the initially reported figure could be much stronger due to inaccuracies with things like the birth-death model. We've talked about that. It's only after the revisions that we find out the numbers were much lower, but the market does not react to it because it's in the past and only really reacts to the headline. We do see a trend of the labor market getting weaker, and we hope that September 1st jobs report is weak, as that is likely what it'll take for the Fed to stop hiking. We're seeing weakness reported in earnings calls from companies like Target, Home Depot, Lowe's, all stating the demand for big ticket purchases are down and that the consumer is spending less. A big one to watch later today will be NVIDIA, which has been on a massive run thanks to AI. The stock market appears to be going the way of NVIDIA, and their earnings will be released shortly after the bell today. Be careful of that one. It's priced for perfection. If you don't get perfection, could be ugly. So I'm not saying what to do. I'm not a financial advisor. I'm just saying if you've got a good stomach, that might be a good place to be. If you've got a weak stomach, be careful. New home sales measures signed contracts on new homes rose 4.4% in July to a 714,000 unit annualized pace, which was better than expected and 1,000 away from the best number in 15 months. Sales are now up almost 32% year over year. There are 437,000 new homes for sale at the end of June. And at the current pace of sales, there's a 7.3 month supply, which is down from 7.4. However, only 75,000 are completed. And when looking at the pace of sales versus homes that are completed, that's the available supply. There's only a 1.3 month supply. A lot of demand for new homes as builders are selling air. 164,000 of the homes sold were not even started. Median price was reported at 436,000. Why are the builders' homes selling so well? Well, they're doing something we've been talking to you about for years and years and years, but right now we've been talking about even more strenuously lately. And I think I shared a little bit yesterday about a $2.4 million home they're going through all these price reductions. Yet that doesn't help anybody with affordability. Had they looked at some of the numbers that we put out all the time, they would have been dealing with a 5.875% interest rate, 30 years fixed, 6.54 APR for the bean counters that are watching, right? And they wouldn't have been taking all these markdowns. They could have used that money to help with affordability. Got to talk to our friends at Geneva Financial about that one. That's the Mortgage Minute, brought to you by our friends at Geneva Financial when you're ready for that next home loan. Geneva's got the programs and the products. You make the call, 800-306-1990, 800-306-1990. And fresh from technical difficulties, our buddy Todd Halterman is in the town. Welcome,
Morning.
Todd.
Good morning, everybody.
Glad to see you, buddy. It's
Great to be
I was
seen.
wondering if got the what's that pineapples on your shirt there, man?
I just came back from fishing out at my beach house for 2 weeks, and I'm still feeling a little vacation-y.
Little vacation-y. Okay. Nice. Yeah, so
pineapples are the sign of hospitality, and you know I'm hospitable.
yeah, and I don't want to we already had a show on upside down pineapples. We don't want to go there.
That's a different captain.
Now, I don't want anybody to feel sorry for you having to come back to do a radio show after 2 weeks being away. But you came back from your beach house to your lake house?
Okay, maybe so.
It's tough to be Todd.
Yeah, I know. But hey, they're paid for. I'm debt free.
Nice.
Yeah.
All right, there we go. In this day and age, I would say that's good. Probably a year and a half ago, I would have said, at 3% money, do you want to be debt free?
The explosive COVID result. Actually, I take that back. I do have one home mortgage, but I don't consider it a debt because it's at 3%, and I make 6% on fixed interest on another note. So I make 3% having my house mortgage.
Something that, and I just shared this morning that we were looking at the 10-year Treasury at 4.213. So I don't know exactly, what kind of risk you have in that, but if you can get a 10-year Treasury at 4.213, I think the 2-year Treasury, the last time I looked, was at 5%. You're still sitting on a 2 or 3% mortgage or 4% mortgage, which is giving you tax benefits, and you can put money into treasuries. I'm not sure why anybody would want to sell.
Banks have a definition, and it's called arbitrage. And the definition of arbitrage is an automatic profit. We have insurance companies and certificates that are paying up to 7% fixed interest guaranteed. So this is a great time for people that have 3 and 4% notes to be able to make 7%, because that's how the bank used to do it to them, and is doing it to them again.
And obviously, I'm a big proponent. If you've got that 2, 3, 4% note, keep it, unless you've got other debts. Because right now Todd, you've got some scenarios where you can help people get rid of some of these debts. Now, we talk about all the time with our student loans, rsrstudentloanhelp.com. Don't refinance student loans. Never, ever refinance, because the government wants to help you with those anyway. But you've got some other programs that you're doing to help people get out of debt, because it's a big problem right now.
Oh, we do. And I actually helped a family last week refinance their home equity line of credit to accommodate a vehicle and a credit card. And the rate on that HELOC was more than their mortgage by quite a bit, but their average interest rate between the home equity line of credit and the underlying mortgage was still below 5%. And so we were able to wipe a lot of their debts out by doing that. We also have a program where we help people guaranteed in 9 years or less get out of debt without spending any more cash on a monthly basis than they spend right now. But we use actuarial science to help people make sure they're directing their monthly monies to the right areas. And then we show them how to pay debts off without having to come out of extra money out of their pocket, which most people don't have.
And that's a big issue right now, because I'm not a financial advisor. Sometimes I play one on TV. But, right now, one of the biggest concerns I have as a consumer advocate is, are we going to go back into a 2008 recession, not caused by real estate, but caused by consumer debt, credit cards, car payments, student loans? To me, there's a big risk of that right now.
There's a risk of default across America. There's a bigger risk for a bank failure than consumer failure. Banks are having a difficulty recapitalizing all the loans they put out during COVID, both in PPP loans to business owners that the government backed, but the banks had to put their capital out. and the amount of capital that went out in the last 3 years in just mortgages before mortgage rates went up. So we're seeing a systemic problem with banking and recapitalizing, which would affect the credit markets. And 2008 was caused by bad credit markets, and that obviously also spilled over into the real estate market. So what am I saying? The chance of a 2008 level recessionary cycle is not high. So to see the drop in the economy as deep as 2008, I don't see that, but I do see some systemic issues that are going to cause us some pain. And we don't know how prolongated the recessive cycle will be, but we also know that the government knows how to utilize interest rates to help baffle the economy and cash flow. So if we see a lot of prolonged pain, we'll see legislation and Fed movements to lower interest rates to empower that economy. But the recessive cycle should have hit already, but it's extended because of all the money that's been printed and the money in corporate America.
So the question then becomes, if that's the case, there's no slowing of money being printed through the through the fiscal policy. The Federal Reserve through monetary policy is trying to slow things down, but they don't seem to be getting any help from the budgets. No.
In fact, it's getting worse. So the challenge is it's just kicking the can down the road, which is why nobody knows how elongated the recession cycle can go. Some economists are holding their hat on an election year that the second half of the year, the government and the Fed's going to show us how they're rescuing us, so it stabilizes the voting market. But some cracks don't feel so well, and we don't know yet. There's a lot of things to consider, including student loan payments starting back up in September. And in October, economists have pointed out that all the savings that people added up over COVID is going to be gone, and they will be, and credit card balances right now are just went over $1 trillion in America.
And the worst part about that is, I've seen the same numbers, over $1 trillion, but now I'm seeing that the average interest on that 25%.
So consumer spending is going to slow down. Student loan repayments having to start up, credit card and debts, higher interest rates, and consumer spending makes up over 65-70% of the economy.
Crazy. We're gonna have to watch that one. And obviously, we've been evangelizing rsrstudentloanhelp.com. That's a big savings. I know one person I just found cut their payments by 60%.
Wow.
Just by going and using laws that are already on the books. It's not executive orders that we have to worry about. So rsrstudentloanhelp.com. 4 numbers is all you have to put in there to figure out what it can do for you. Wow. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, there is a site you can check to see if you are a veteran, if you're required to pay property taxes. We'll talk about that, why you need a true expert in today's housing market, and more. Reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Is your budget getting blown up with high prices of gas and increased costs for other household needs? This is Ron Siegel, host of the Daily Home and Finance Radio program. Did you know if you have a low interest rate mortgage, along with auto debt, credit card debt, or student loans, your family could potentially save $500 or more per month by restructuring these debts? If you'd like a free Borrow Smart analysis with our team, let's book an appointment to see how we might be able to relieve some stress. Schedule your appointment at rsrbsa.com. That's rsrbsa.com for your free Borrow Smart analysis. rsrbsa.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Going to go off script a little bit, Josh, because I want to make sure we get this, and sometimes I talk too much. Borrow Smart segment brought to you by rsrvaloans.com. rsrvaloans.com. Let's chat about this one. So think about this. There is a group of people that have laid it all on the line for us. So we've got some extraordinary news today for our nation's heroes, those that are 100% disabled veterans. Let's dive into it. The headline is full property tax exemption for our 100% disabled veterans. This isn't just a policy change, folks. It's a symbol of respect and gratitude. First, full property tax exemption. This means more affordable housing and home ownership for those who have put everything on the line for our country. Now, there are three crucial guidelines to remember here. You must prove 100% disability. Your municipality must have a law for 100% property tax exemption, and there's the possibility of retroactive application of this exemption even up to 2 years. Now, I don't know if that's going to be in your neighborhood or not, but just remember you got to look into it. Number 3, empowering veterans towards home ownership. This isn't just a policy, folks. It's a heartfelt embrace from our nation, empowering many of our brave veterans to achieve the dream of home ownership. So here's the bottom line. If you're a veteran or know someone who might benefit, don't hesitate to reach out. Give us a call at Geneva Financial. We're committed to guiding you through the process. We're here to serve those who have served us. Share this video using the hashtags Ron Siegel Radio or RSRVA Loans, and share it with a veteran. Share it with somebody who may know other veterans. And we want to really get this message out so that people really understand it. I think I've got a website here, but it's too long to just show or to tell you. So if you want the information on the website, give me a call at 800-306-1990, 800-306-1990. And we'll put it in the show notes as well. That is the Borrow Smart segment brought to you by rsrvaloans.com. Continue our conversation with Todd Halterman this morning. So, Todd, I want to chat with you today because right now there's not a lot of good reason for people to sell a house. I mean, if you've got a 2, 3, 4% mortgage, people are not selling their houses right now to go and buy at a, I don't know, what did we say earlier today, that 7.3% mortgage. So one of the things that does help, and obviously I've talked about this a lot, is number one, you can sell, use some of your equity, pay off your debts, your blended household interest rate. The fact that you've got a 2% or 3% mortgage is irrelevant when you've got 30% credit card debt. But those that are thinking about selling, and, I've got a friend of mine that is selling in Southern California and moving to Idaho, and he's got a big capital gain in the departing property, but it's his primary residence. So doesn't qualify for the 1031 exchange. Are there other programs out there that he could use, easy for me to say, strategically to sell his departing property and buy something else?
Yeah, we all the time help consumers who are selling real estate or business assets not pay tax at closing, or are able to defer a majority of that tax to a later time where they can pay the tax when they can pay less tax. Oftentimes when people sell a large asset that's grown a lot, they have to pay all that tax at once, Ron, and you and I both know that big windfall causes big windfalls of tax as well. In the state of California, there's the state tax, the federal tax, the net investment Medicare tax. And these numbers just continue to rise, not to mention that if you're on Social Security and Medicare, the Medicare cost of premiums monthly go from, in the 160 regions to 260 and then to 430, just because they sold a real estate asset and made money. So we like to help consumers not pay taxes at closing by doing financial planning. And real simple, Ron, we help set up trust entities for consumers who can put their home into the trust and then sell the home or the real estate or the business. And when the property closes, the money goes into the account and the client holds the money in that account to use however they would like. but they do not have to pay taxes on the sale until they draw the money out to use for themselves. So that is a primary way for a lot of Californians moving out of state that we've helped them above what their exemptions are, because a primary homeowner, if they're married, has $250,000 exemption per person against the capital gains. So their gains need to be over 500,000 before we'll even consider any, what I'll call tax mitigation techniques.
So this almost for a simple guy like me, I could kind of think of this. It sounds to me, and I know it's not the same, but it almost sounds like it's a type of a 401k or IRA where you've got the capital gain, you've taken that in, but it's not really taxed right now. It's taxed at some time down the road, unless there's other strategies that you're doing then.
It defers the tax just like an IRA. That's a great analogy, actually, Ron.
Now, can I do that with any kind of a capital asset?
Most real assets, anything that's highly appreciated. We do very well with folks that have fine art. We've actually taken hundreds of thousands of dollars of art pieces and helped consumers sell, because art sales tax income tax gain starts at 37%. So we've done fine art pieces, we've done businesses, we do real estate, we've done investment assets like highly appreciated stocks. We've had somebody that bought a stock at 5,000 and it turned into 500,000. So
they bought NVIDIA, is what you're saying.
It's always knowing when to sell some, it.
Exactly.
Yeah. But do not put off selling an asset because you're worried about paying taxes. There are ways to help lower that or mitigate it or defer it. People just sometimes get afraid to look.
And I want to throw in there, we're not giving any tax advice here. We're not giving financial advice. The idea here is these are ideas. If you want the exact way of doing these things, give me a call at 800-306-1990. I'll put you in touch with Todd, and he gives tax advice and all these, and works with CPAs and lawyers and all that kind of stuff to make sure that everything is done straight by the book. But it might be a book that you or your tax planner has never read.
Well, this is almost 100-year-old tax laws that we use, and it is black and white. Over the last 30 years, I can point to over 25 different private letter rulings that have proven this 95 plus year tax law.
So let me ask this part of it, because, obviously here in Southern California, or actually all of California, we love taxes. I mean, we prove it because we vote for the people to keep adding more and more of them to us. So a friend of mine, not in the state of California, actually recently was negotiating on buying a boat. And his method of buying the boat was the boat was owned by an LLC, and he was just buying the LLC.
Yes. And
my understanding is then there's no sales tax because it wasn't a property that was taxable because it's an LLC that he bought. Can something like that be done with real estate?
If it's done like that, then what it's called is a basis to basis transfer. So that means the person who sells the LLC is going to transfer it with the same cost basis. But it really comes down to sale price, because if you put a boat in an LLC, the boat has value. That means the LLC has value. If that boat's gone down in value, and many boats do, and most likely it has, then the sale is going to be less than what it was paid for it. So for the seller, there would actually, as an LLC, there would actually be a tax loss. So putting depreciating assets into a corporate entity can be very smart.
Interesting. Now, what about real estate? Because our real estate in Southern California, where you're talking right now, I just looked, I think it was last week, I think I looked, that the median home price in Orange County, California now is a little over $1,100,000.
Right.
So, the property taxes on that is going to be astronomical. Can you do something like that with real estate? Is that allowed?
Real estate is held in a lot of LLCs across the nations, but again, it goes back to valuation on whatever it sells for and cost basis. It does not wipe out the capital gain tax. But what we do for people that hold real estate in LLCs is the LLC will transfer that piece of asset into this trust, and the trust will hold it instead of the LLC right before you close on the property. But it does not mitigate taxes whatsoever. And if it's a primary dwelling that people live in, it would be a mistake to put it in an LLC because they would lose their capital gains tax exemptions as their primary home. So you have to be very careful about how you create corporate structure.
Now, is that something that you do by yourself, Todd, or do you do that in concert with CPAs, attorneys? How do you do that?
I will not work on any of these transactions for a client without visiting and working with their CPA, an outside third-party CPA, and a tax attorney that's representing their trust. I do that for three reasons. Number one, I'm always a measure 3 times cut once kind of person. I grew up in agriculture, and Mother Nature was not kind to us, so we're very cautious. Number two, we have to make sure that we know exactly where their gains and losses are at in their investments, because sometimes the trust is not needed and can be overkill. The third thing is we have to involve everybody on the table to make sure that they understand how to work with their trust after the sale, because it's like running another company. They ask for money when they need it. They can reinvest it in other assets, and they can even reinvest it in other assets without paying taxes when they use the money. So education is paramount. So those 3 steps make sure that we don't make a mistake. We measure 3 times cut once, and people really understand what they're doing.
Interesting. I want to talk more about that. I want to get into the idea of this education, and then might we want multiple trusts? We'll talk about that as well. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Is your budget getting blown up with high prices of gas and increased costs for other household needs? This is Ron Siegel, host of the daily home and finance radio program. Did you know if you have a low interest rate mortgage along with auto debt, credit card debt, or student loans, your family could potentially save $500 or more per month by restructuring these debts? If you'd like a free Borrow Smart analysis with our team, let's book an appointment to see how we might be able to relieve some stress. Schedule your appointment at rsrbsa.com. That's rsrbsa.com for your free Borrow Smart analysis. rsrbsa.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Did you ever look at Zillow and take a look and see what your property value is? Do you ever want to get a professional opinion, not the one that's online? Well, RSR Money gives you 4 different opinions, but you can give us a call at 800-306-1990. We're happy to get a real estate agent to take a look exactly what your property value is and why you need a true expert in today's housing market. Housing market continues to shift and change, and in a fast-moving landscape like we're in right now, it's more important than ever to have a trusted real estate agent on your side. Whether you're buying your first home or selling once again, it's mission critical to work with an expert who can guide you through each unique step of the process. The reality is, not all agents operate the same way. To truly make a powerful, confident decision as you buy or sell a home, you need a real estate expert who uses their knowledge of what's really happening with home prices, housing supply, industry projections, and more to give you the best possible advice. Someone who could provide clarity, trust like that is essential to your success. Jay Thompson, real estate industry consultant, explains, quote, housing market headlines are everywhere. Many are quite sensational, ending with exclamation points and predicting impending doom for the industry. Clickbait. The sensationalizing of headlines and content has been an issue since the dawn of the internet, and housing news is not immune to it, unquote. Unfortunately, When information in the media is not clear, it can generate a lot of fear and uncertainty for consumers. As Jason Luris, co-founder and chief data officer at Parcel says, quote, in the absence of trustworthy, up-to-date information, real estate decisions are increasingly being driven by fear, uncertainty, and doubt, unquote. But it doesn't have to be that way. Buying a home is a big decision, and it should be one you feel confident making. You can lean on an expert to help you separate fact from fiction and get the answers you need. The right agent can assist you in figuring out what's going on at the national level and your local area. They can debunk headlines using data you can trust. Experts have in-depth knowledge of industry and can provide context so you know how current trends compare to the normal ebbs and flows in the housing market, historical data, and more. Then, to make sure you have the full picture, an agent can tell you if your local area is following the national trend or if they're seeing something different in your market. Together, you can use all that information to make the best possible decision. After all, making a move is potentially a life-changing milestone. It should be something you feel ready for and excited about, and that's where a trusted expert comes in. Bottom line, if you want sound advice and trusted information about our local housing market, give me a call, 800-306-1990, 800-306-1990. We're continuing our conversation. Todd Halterman is chatting with us. Trusted advisor, Todd Halterman. Not giving financial advice here today. We're giving education and information. If you want specifics, give me a call. I'll put you in touch with Todd, and you can do that. So, Todd, you were talking in the last segment, and it got to thinking, if I've got multiple assets, do I put them in multiple trusts, or can one trust handle all the assets that I'm thinking about reallocating?
Well, the thing is you've got to defend yourself. I don't care who you are. Offense sells tickets, but defense wins championships. And people just blindly continue to do the same things they do, even though the entire economy and the way the world does business has changed. And you can't do that. So you need to reallocate, you need to rebalance, and you need to understand which industries and sectors of the global marketplace is successful and profitable in up or down markets. There's always places to make money, Ron, but those people that just sit there and just hold on, it'll come back, that's laziness. You should be preparing yourself for headwinds. America has relied on diversification, and now because of banking debt and the change in global commerce, diversification does not eliminate or reduce downside risk anymore. You have to make sure you understand how to defend yourself.
That's an interesting concept, especially when we're talking with, and obviously a good portion of our audience is in California. I would say, we watch and see our real estate values have been going up so much that you start looking at it and you say, you got a 5-year appreciation of 7.45% in Orange County each year. And you think if you put 20% down on a property, and you don't need to put 20% down, but if you did, that's 35% a year on your cash appreciation or growth. You might be getting a little bit too concentrated. Is that a fair assessment?
Well, concentration becomes an issue, but the reality is some people just can't sell their home just to help it harvest or protect themselves from going down. There are techniques to take money out of a home to be able to use it tax-free, and that's in your realm. But it's a difficult conversation unless it's an investment real estate asset on how to rebalance that. But with their other assets, we can counteract it. But yeah, it becomes a difficult conversation to say the least. And California is an interesting market because when it capitulates, it really capitulates.
Absolutely. The other thing I wanted to circle back to that you mentioned in the last segment was when we're talking about some of these vehicles that you use to try and mitigate tax liability or defer tax liability. You were talking about the education aspect. I talked to quite a few CPAs and attorneys, and some of the things that you and I chat about on radio, they're like, that sounds like voodoo, Ron. That can't be legitimate. Where would one send them? Do you help educate them if they're in a transaction like this?
Well, that's the whole point. A consumer can't make good decisions without positive or proper information. And the types of work that we specialize in with trust companies is very specialized. And a lot of your common down the street CPAs that are tax preparers or general bookkeepers for businesses or real estate investors aren't knowledgeable in this realm. And you'll find a lot of attorneys or accountants that aren't knowledgeable or haven't done it before. They'll just poo-poo it and say, oh, just pay the tax and move on. I don't want you to do that. The reality is they don't know how to do it. They're afraid of doing it. They think there's a increased risk of audits, but the truth is they're wrong. They're just afraid of it because they've not done it. They don't specialize in it. And that's not something they do. And it's not their money, so they don't mind when the client pays the tax.
That's an interesting one. And that, I think it goes with a lot of things. That which we don't understand, we don't like. As opposed to saying, it's 100-year-old tax law, and then they have to admit that they've never heard of it.
Well, it's like a primary doctor that sees you when you're sick and does your well exams. As soon as you need an appendectomy, they send you to a general surgeon. It's not something they do. They're afraid of it. Their malpractice won't cover it. Be smart. Get second opinions, and then validate it with a third if you need to.
That's a fascinating thought right there, because it's interesting in some vocations, and as you mentioned, a general practitioner, they're pretty quick to say, something, that's not what I do, go to the specialist. Yet when you're talking to a CPA and an attorney, frequently they're saying, I don't. There's nothing like that in the code. As opposed to saying, something, I deal in general CPA work and I deal with this and this. Maybe you do need a specialist, and they feel like they're showing their own weakness. None of us want to look weak.
No, they don't want to say, I don't know. They don't want to say, I've never done it before. They don't want to say, this is not something I have knowledge in.
Do you have ways of educating them so that they don't, so that they do get on board with the idea?
Sure. If they call your office and they want information, we've got videos and interactive ebooks and the opportunity to submit a one-page form for a comparison to show the difference between utilizing some of these strategies versus just paying the tax when you sell. All of that we do at no cost. We want to make sure people are fully informed, and we like to involve their tax people because it's somebody that's been working with them forever, and why would we take that away from them?
So when we get this, and I know we're running out of time, but when we do set a strategy like this, and once we get into it, is it going to, over the cost of setting all these things up, is it going to be advantageous as compared to the cost, or am I going to know what the cost is of setting this up and implementing as compared to what the cost of just paying the tax would be?
Cost is really important. I mean, it's everything. I don't want to spend money on something if it's not going to do what I need it to do, but if you pay 25 to 30% tax on a sale of an asset, and you can, for less than 0.5% of the sale, set up your structure, 0.5% is about the average cost to set the corpus up, instead of 25 to 30%. So you tell me.
Yeah, I think I'd rather pay a half as opposed to 25 or 30. That sounds like a good trade for me.
Yeah, there's a couple other ancillary fees in the establishment of it, but in general, it's way less than 1% to get things done and set up versus 25 to 30. And then you control when you pay tax, and you control how you use those assets, and you'll never have to use a 1031 ever again.
Now, when we do something like this, and I know Josh is going to kill me when I ask another question, does this going to involve the recapture of all of the depreciation we've taken?
Recapture depreciation is an issue that we evaluate up front, because there are some techniques which we can mitigate that, but we have to do some strategies to help with that. So that's a very important piece to know up front.
Good deal. So basically what we've learned today is we need to call Todd. 800-306-1990, because there's a lot of questions, there's a lot of evaluation, and we're going to find out ahead of time whether it makes sense to move forward or not move forward, and then we take the next step from there. If you want to meet Todd or any of his team, give me a call, 800-306-1990, 800-306-1990. And as always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
By the hour and older by the minute.